Good morning, everybody. Thank you so much for joining us. We're going to go over the Thrive Maine program this morning as part of the Maine Jobs and Recovery Plan. This is an informational session on the program, and we're going to go over the qualifications and details around the 3 application choices when you're applying and how to get prepared for the October 4th launch of the program. This is the first of 2 sessions that we'll be holding. This one's more informational, and a second one more at the end of the month. We'll go over the actual application portal and what you can expect to see on October 4th. The session is recorded, and the Q&A function will be enabled. So please utilize that during the presentation. If you have any questions, we will try to answer them during the presentation, and anything that's not answered will be answered over the weekend, and we will send out the answers to all those questions as well as the recording of the presentation next week. So you can expect to receive that in your inbox if you were registered for the presentation. We are also offering translation services for the webinar. If you have that need, please email thrive@famemaine.com with your language preference, and we'll make sure we get that to you. We're also in the process of translating our website application and checklist as well in 6 languages. So those will be available next week. And we will get going. I wanted to introduce Laura Rigby, who is the Thrive Maine program manager, who is a contract employee for the Finance Authority of Maine. She's also on the call and will be joining in the presentation in a little bit. My name's Jen Cummings. I'm the Director of Business at the Finance Authority of Maine, and we're really pleased to have you all here with us this morning. As part of the American Rescue Plan Act, the funding was allocated to all states in the country, and Maine received $120 million, received $1.1 billion, but part of that has been allocated to the Finance Authority of Maine to deploy between 2 programs. One we'll be focusing on today, the Thrive Maine program, that really focuses on COVID relief efforts for Maine small businesses. This pool of money is $58 million, and it was allocated by the legislature and the governor under LD 1733 through the Maine Jobs and Recovery Plan. The other program that I'll just touch on is Grow Maine, and this is more forward-facing to grow and expand companies through the State Small Business Credit Initiative. And the more information on those programs will be coming out within the next 3 weeks, but we're really focusing on past economic impacts today through the Thrive Maine program. The $58 million will be rolled out in the form of forgivable loans. There are no collateral or guarantee requirements in with this funding. With a forgivable loan, there are no payments and 0% interest, and the forgiveness will occur over a 4-year period at a rate of 25% a year. The stipulation on the forgiveness is only that the company remains in operations in the state of Maine. The loan sizes are at a minimum of $10,000 and a maximum of $2 million. So each year you will sign a certification saying that the business is still operational, and that in turn will trigger the 25% forgiveness in year 1. And then in year 2, the loan would be 50% forgiven. These are taxable events, so check with your accountant to make sure that you understand the ramifications of that forgiveness. Also, just to mention, if you sold your company in year 3, the forgiveness is assumable, so just keep that in mind as an option if that fits in your company's demographic. The eligible businesses that are able to apply for the forgivable loan are small businesses, including nonprofits. you have to have less than 500 employees, and 50% or more of the employees have to be in the state of Maine. You cannot apply for the same expense or impact twice that you received any previous federal or state pandemic relief funds for. So anything you're not required to pay back would impact your eligible forgivable loan amount. So that amount will be deducted from your eligibility of loan forgiveness. So think about PPP loans that were given out, that would be negated out of your calculation. And we'll go over that in a couple minutes when we start getting into kind of the application choices when you get in there. Just a little bit on the timing. We are launching the program on October 4th. So we're really trying to get the word out there to share what you need to do to be prepared for that October 4th date. This is a first come, first serve program. So be ready to apply. The applications will open at 9 a.m. Only complete applications will be processed. This is really important. The more information you can provide us, the better. I would say to submit more information than you think is necessary, just so that there's no questions. We expect an influx of applications on day one, and anything that's not complete will be declined, and kind of you'll be notified of that, and you'll be told why, and then you can resubmit your application at a later date once you have it completed. There will be 2 application periods, the first being October 4th, and we'll be allocating $29 million in that first cycle. And then a second cycle will be opening in 2023. We expect early 2023, with the other $29 million being allocated at that time. The award limits are spread amongst the size of economic loss. So trying to avoid larger economic loss forgivable loan sizes kind of eating up the pool of money quickly. So we do have a back end calculation that we're tracking to make sure that doesn't happen. So we're just kind of going over the timeline. October 4th at 9 a.m. Make sure you get in there and apply. Your application status will be under review once your application is successfully submitted. It will take up to 6 weeks after applying to be notified of a decision on your loan application. The funding will be direct deposited into your bank account. It may take 2 to 3 weeks from that decision point to get the funding. During the application, you will be asked for routing and bank account information so that we can automatically send you the funds as opposed to doing paper checks. The application will close December 3rd. It is likely that the funding will run out sooner. And so if you don't get a chance or you're not approved in that first cycle, there will be another opportunity in early 2023.
All right, this is me. Let me close out of the Q&A. Okay, so let's talk a little bit about the details of the 3 different categories that you can apply for. Really important piece of information. There are 3 categories. You get to apply for 1. You cannot combine categories. You need to decide and really look into all of the numbers and figure out which of these 3 categories would be most advantageous for you to apply for. Meaning, which one do you have the biggest provable economic impact? And we will go into a lot more details on all 3 of these in the coming slides, but the 3 different categories are loss of EBITDA, pandemic expenses incurred, and increases in capital project costs. So to go into the first one, EBITDA, the loss of EBITDA, you could be sitting there saying, what the heck did Laura just say? What does that stand for? What is that? So EBITDA is a financial metric. It's an abbreviation for earnings before interest, taxes, depreciation, and amortization. It's basically your operational cash flow before a lot of the financial tools come in that a manager doesn't have control over. So this is used in comparison points to see how the business strength is year over year or in comparison, because things like your tax rate, right? Or interest on a really big debt that someone bought 10 years ago, or a depreciation schedule. If you're the day-to-day manager of a business, you don't control things like that, but you do control a lot of things within the business, and EBITDA measures that strength of that day-to-day business. So we're going to watch a quick 2-minute YouTube video, just because sometimes it's helpful to have someone else's voice explain it to help it really sink in.
Numerous factors affect the net income of a company: operating expenses, interest expense, taxes, depreciation, amortization, and others. Financial analysts are using various metrics to analyze performance of the company. One of them is called EBITDA. EBITDA stands for earnings before interest, tax, depreciation, and amortization. One of the reasons for its popularity is its focus on the financial outcome caused by operating decisions made by the current management of the company. Think about it. Current management may have nothing to do with many factors affecting net income, like amount of debt and the level of interest payments the company has to pay. Neither it can control the tax rate established by government, nor it can easily control the depreciation or amortization expenses. While EBITDA is one of the most popular measures, depending on the industry and capital structure of the company, terms EBT, EBIT, EBITDA are also used. So how do we calculate it? Let's take a look at the income statement of the XYZ company. It made $500,000 in revenue, spent $200,000 in operating expenses, had also spent $25,000, $75,000, $50,000, and $100,000 on amortization, depreciation, interest, and taxes accordingly, and made $50,000 in net income. At first, let's add back taxes, and we get EBT, earning before taxes. Next, let's add back interest expense. We get EBIT, earning before interest and taxes. And finally, let's add back depreciation and amortization, and we get EBITDA. To find out more, go to financeratios.com.
Super, thank you. So don't be intimidated by this metric. You have plenty of, if you're confused at all, your accountant or your bookkeeper is very familiar with the term EBITDA, what it is, and how to calculate it. You've got people around you to help. Yeah, perfect. So, okay, so there are a lot of variables that go into impacting EBITDA. And across the pandemic, we've seen this with a lot of financial levers. So things like decreased sales, increased labor costs, increased material costs, or utilities. All of those things we saw and felt, right, in the pandemic, and they're all going to impact your EBITDA. So by taking the EBITDA metric instead of just, how are your revenues or how are your expenses, we folded all of those in and we're using EBITDA as the comparison point. So to get a little bit more nitty-gritty about how to calculate this for the application, what we're doing is we're taking 2019 EBITDA, so that's the comparison base year, and subtracting out either your 2020 or your 2021 EBITDA. We also remove any previous pandemic funding that was meant for business support in this category, and that's the amount that you're able to request for a loan. A company may apply for 2020, 2021, or both years together. And we'll go into an example after of this, of how exactly we calculate that. But important to note here, you got to have documentation. And what that means is you're going to have to supply your taxes, your income statements, and all of those things should match. We are not accepting any projections, budgets, hypotheticals. We know that a lot of people had big plans for one or both of the pandemic years, but we're taking actuals. And also, it's a full year comparison. So because of this, we need a full year base year to compare to, which means for this category only, a business must be incorporated by 12/31/2018, which then allows a full year of business to compare to prior to the pandemic, so that we can get that accurate calculation. So to put some numbers on this, this is our fake company that says that had 50,000 in EBITDA for 2019, actually lost 20,000 in EBITDA for 2020. And then in 2021, they did a little bit better, but not back to 2019 levels of 35,000. A couple notes here. First, I'm using really round, easy numbers. This is not what you're going to apply for. You're going to apply for down to the penny. You're going to use exact numbers. I'm just using this for ease of math and communication, but we need exact details and proof for everything that you provide. And second is this note here is that these fake numbers include the PPP and any other relief. Some companies put the PPP and other pandemic relief in things like other revenue, and so they're already woven into the EBITDA on their income statement. Some companies have kept those aside and haven't included them. We need those included into the calculation, and you can do it either by including them in your income statement or subtracting them after. Either way, they've got to be incorporated. But this is just a note to say, okay, this fake company has already put them in, so we don't need to worry about that for this calculation. Okay, so to look at the 2019 amount, what you would do is you would take your base year, so 50,000, minus a negative 20 to give you a full swing that year of 70,000. And then this company is also going to apply for 2021. And the calculation there is, again, 50,000, my base year, my 2019 year pre-pandemic, 50,000 minus 35 gives us 15,000 in comparison to 2019. And then the actual amount that they would apply for is 70 plus 15 to give you 85,000. So a note here, if, for example, if the company in 2021 actually did better, they bounced back, they made 60,000 in EBITDA, great. This does not negate any of the losses in 2020. They would still apply for 70,000 because that's what they were eligible for in 2020. Making money more doesn't take that $70,000 down. And the other thing here is that hopefully nobody in this webinar is in this situation, but there could be businesses that are still really feeling the financial impact and are losing money still in 2022. That is totally valid, but you can't apply for it yet. Again, this is a full year comparison. 2022 isn't over yet, so you can't apply for 2022. We will have a second round of this Thrive Forgivable loan program starting in early 2023, and that's when you could apply for a 2022 loss. Okay, second category, pandemic expenses incurred. So any of this, any purchases that a business made to keep employees and customers safe and healthy from COVID-19 count for this category. Things like masks and PPE, special air filtration systems or HVACs that are needed. If you work in an office environment and all of a sudden everybody has to go remote, right? You're buying laptops and remote software, that counts. We've heard from restaurants and, daycares and other in-person facilities that they need to buy more cleaning supplies. All of those counts. What is going to be important from you is to prove with every single expense why it's directly linked to COVID safety. So to calculate this category, what you're going to do is you're going to take all of those qualifying expenses, you put them together, And then you take out any previous pandemic funding that was for that purpose, and you'll have to explain what all the different purposes of your pandemic funding were, and prove that nobody else gave you money to buy masks. Okay. Take out any previous pandemic funding for that reason. That's the amount of your forgivable loan. Things in this category need to be either spent or committed to be spent before December of 2024. We are not accepting anything projected. So if you're telling me that in 2 months you're going to put in an HVAC system, great. You can't apply for that yet. You haven't spent that money or you haven't committed to that money. If you show me a signed contract saying I'm going to put in an HVAC system, okay, then you've signed your name, you're going to pay, but we need that proof. So for every single expense, we need a receipt, we need an invoice, we need a contract, we need proof. If you went and spent $10 on a box of masks at Walmart, but you don't have that receipt, you cannot apply for that expense. In this category, businesses can be significantly younger. Startups are definitely welcome here. Any company that was incorporated by the end of August this year is able to apply for this category. Third category, the increase of capital project costs. So this is a category meant for balance sheet impacts more than income statement impacts. So our classic example here is construction. Say your company wanted to expand a factory and you got a quote and you got everything ready in January 2020. And then COVID hit and you paused to see how the world is going to land out of this giant spin out. And then actually you pick up the project again in October 2021. And now the same exact project is 30% more. That 30% increase is what you're able to apply for in the capital project cost category. So to calculate this, what you do is you take the pandemic paid cost, so the higher amount, subtract the lower amount, so get that delta, and you take out any previous pandemic funding for that reason. That's the amount of your forgivable loan. Again, like the previous category, these need to be spent or committed to be spent before December 2024. And again, not projected. You can't tell me that you're going to do a giant project in 2 months, but you haven't signed anything, you haven't started anything. That's not acceptable. Again, come back in round 2 when you've signed the contract or you've started spending or you have spent it all. We'll need receipts, we'll need invoices, we'll need proof for everything. And again, startups and smaller and younger companies are very much welcome in this category as well. And to really hit it home, we need written proof for both the spent or committed and the previous one. If you had a verbal quote or you don't have a comparison point, this is not the category for you. We need every single expense and quote documented so that we have the evidence for that file. Things that don't qualify here. If you expanded your scope, that increase in scope, you can't apply for that increased cost. They need to be apples to apples comparison so that we can just address the part that is now just more expensive and totally out of your control that it's more expensive. Regular business costs, like we said, labor, energy, all of these things have increased, but those would show up in the EBITDA. They are not eligible for this capital project cost category. And third, a comparison to 2015 isn't eligible. There's been a lot that has changed in the world since yesterday, but 2018 on is where the comparisons need to come from. If you're showing a 2014 comparison point, that's just too far away, and we can't assume that the projects are close enough and all of the variables are close enough to tie it back just to COVID. So any comparison point of that first quote that you got has to be from 2018 or more recent. All right, I'm going to kick it back to Jen.
Thanks, Laura. So just some important notes as we kind of wrap up. Any incomplete or unproven requests won't be processed. So as Laura was discussing, the really tying that negative impact to COVID. You can apply again with a more complete application if at first application something's missing. You are able to upload additional documents to your application and be reconsidered, but you would lose your spot in line. Make sure you prove and explain each expense category. A narrative is required in the application. So when you go in, you will have the requirement to create a paragraph explaining your situation. You know, there was a lot of questions in the chat around years that qualify versus not. And if there's, you know, an extraordinary event, say in 2019, and that's not comparable to typical history, you can submit 2018 as a baseline year. So just submitting anything you think is relevant to kind of prove your case, prove what the historical numbers looked like versus those years during COVID 2020, 2021. Really making sure you include all of your financial information. Also, there was a question in the chat that seemed to be pretty consistent around fiscal versus calendar year. You can use fiscal year, just make sure you're including all of those historical dates and data that would provide that baseline for us to calculate going forward. So fiscal obviously would be acceptable if that's what your company does for your tax return purposes and when you file. Items to gather, and we'll go over this in the next slide, but the UEI number, the unique entity identifier. This is a number that kind of is weeding out some fraudulent activity as a lot of organizations are rolling out these funds. This is a federal requirement that anyone that receives these funds has to have been assigned one of these numbers. This is a replacement of the DUNS number historically. We'll go over in a moment some resources if you're having trouble getting the number, and kind of go over a little more detail in the next slide. These are all things we have to process an application. Your company has to be in good standing with the state of Maine through the Secretary of State. There is the corporation's elections division of the state of Maine on their website. You can check to make sure your company is in good standing and get that addressed if it's not. Up to date payroll, state and federal taxes. This is really important. When you sign your application, that gives you're also authorizing us to cross-check that any back due taxes are in repayment. So if you are in a repayment plan, that's okay. But we are cross-checking that with outside resources to ensure that there are no back taxes. We are requiring 2019 to 2021 federal income tax returns, business and or personal. So if you're a sole proprietorship, you would submit your personal tax returns with your supporting schedules that are relevant to your company. If 2019 was an off year, as we kind of mentioned earlier, 2018 is an acceptable substitution, but we need both. So make sure you're giving us more information than less, and make sure we're getting full federal income tax returns, not just the first 2 pages. We need the entire thing. And we also will be asking in the application ownership percentages of your companies. So make sure you have that information available as well. Also looking for profit and loss and balance sheets for 2019 to 2021 and year-to-date 2022 figures. If you're on extension for your tax returns, please, you're coming up close to the date that they're required to be filed, but make sure you send that extension information in as well, just so we know. And the last bullet, really, really important, listing an explanation of all federal pandemic funds previously received. So I did see some questions in the chat around what is going to be taken out of your calculation and what won't be. So anything that you have to repay won't be negated out of your eligible loan amount, and anything you didn't have to repay, like PPP, would be taken out of your eligible loan amount. So it is a federal requirement that you can't double dip, essentially. Can't get same non-forgivable loans. I'm sorry, you can't get forgivable loans for the same purpose more than once. So a little bit more about the UEI number. This is generated by the federal government, and it is a reporting requirement that anyone that is receiving ARPA funding have the get a number. So when you go on the site, there's two choices. You can get a UEI or you can register for a UEI. The get option, just getting the general UEI number, is a short process if you put in everything that exactly matches the database of the federal government. So if there's a comma missing or anything is off, you'll be put into a backlog. I also saw in the chat, we've been kind of fielding calls and emails from people saying that this process is really cumbersome. Unfortunately, there's really nothing we can do about this requirement. It is a federal requirement of the funding that anyone receives that has this number. You don't have to register for a number to be eligible to get ARPA funding. The registration is about an 18-page application, and it's more around entities that are looking to, at some point in the future, be getting more federal grant funding. The only thing that's a requirement for this program is the getting the kind of baseline UEI number. The how to obtain a UEI number from sam.gov is that link that will be on the PowerPoint presentation that will be sent to everyone, along with the Q&A and the recording of the video. That link is how to just get the number. It doesn't go into that registration option. It's just the more simplified UEI instruction video. We do have some partners at Maine PTAC, the technical assistance folks. That is a free resource, and they have offered to help people that are having trouble with that process get their UEI number. So that's a resource. They're free. Can certainly reach out to them if you're having trouble with that UEI number. So key takeaways, get your UEI number, gather your materials, figure out which category works best for you to get ready to apply. I will also say on that first category, I saw a couple questions in the chat around maybe you purchased a company within 2019 to current. That does qualify as the EBITDA loss category, as long as you have the financial information from the prior owner of the company. So I will just mention that. I did see that question a couple times in there. So just kind of think through which loss choice would be most beneficial to you and your company, and check with your accountant on that forgiveness piece, that 25% forgiveness on an annual basis. Put a marker in your calendar for September 28th at noon, and that's going to be, we'll do a quick review of the synopsis of the 3 loss choices, and then we're actually going to go in and show you the application and what that's going to look like, how to upload your documentation, and all of the fields you'll be needing to fill out as part of the application process. The portal opens October 4th at 9 a.m. It is first come, first serve, so make sure you're ready when that happens. So thank you all so much for coming today, and we really appreciate your time. And there are a ton of questions in the Q&A. We're not going to open up for live questions today, but we will go through and answer all of the questions in the Q&A and get those answers out to you, as well as a recording of the presentation and the PowerPoint as well. So we really appreciate everyone's time today. If you have any more questions, you can email thrive@favemaine.com or visit our website, which has informational sheets as well as checklists that go over all of the items we went over today. And that's favemaine.com/thrive. So thank you all. Hope you have a great weekend.